Datavault AI, trading under the ticker DVLT on the NASDAQ, is currently priced at 95 cents USD as of the market close on December 22, 2025. The stock saw an intraday decline of 1.81% during the last session. While the sub-dollar price point often suggests a company struggling to find its footing, the reality beneath the surface of Datavault AI is far more complex than a simple penny stock narrative. Most investors look at a price chart and see a downward trend, but they are missing the fact that this company recently secured a massive $150 million strategic equity investment from Silex Holding Company, part of which was executed using Bitcoin. This is not just a standard cash injection. It is a calculated move to integrate high-performance computing with real-world asset tokenization. The expectation is that Datavault AI is just another small-cap tech firm burning through cash, but the reality is that they are quietly positioning themselves as the infrastructure layer for a multi-trillion-dollar market in data monetization. When you look at the broader market, stocks like NVIDIA stock or Apple stock dominate the conversation because of their massive scale. Yet it is the smaller, specialized players like Datavault AI that often provide the most significant surprises for those willing to look past the surface. While many people use an individual brokerage or a popular Robinhood app to chase the latest trends in Tesla stock, the sophisticated investor is often looking at how companies like Datavault AI are patenting the very methods by which data is valued. The general belief is that data is just a byproduct of business, but Datavault AI treats data as a primary asset that can be tokenized, licensed, and traded like a commodity. This is a massive shift in thinking. If you are currently using Fidelity Investments or an interactive brokers platform to manage your portfolio, you might notice that the volatility in DVLT is extreme, but that is often the cost of admission for a company trying to create an entirely new category of software licensing. The recent movement in Datavault AI has been characterized by intense trading volumes, often several 100% above its historical average. This indicates a high level of institutional interest and a significant reshuffling of the shareholder base. On December 22nd alone, over 176 million shares changed hands, a massive spike compared to the usual daily volume. This kind of activity usually precedes a major shift in valuation or a realization of the company's aggressive revenue guidance. Management has recently raised their 2026 revenue projections to over $200 million, a staggering jump from their current trailing revenue. This creates a high-tension environment where the market is waiting to see if the company can actually execute on these licensing deals or if it is just a case of overpromising. If you are doing your own self-investing through a SoFi active investing account or using investing sites to compare fundamentals, you'll see a net margin that looks terrifyingly negative. However, this is largely due to the massive scaling costs and the non-cash charges associated with their recent restructuring from what was formerly Visa Technologies. For those using a SoFi robo-advisor or Schwab Intelligent Portfolios, this type of stock rarely shows up because of its high risk profile. Yet, for the individual trader on a Fidelity trading platform or someone managing their own Fidelity IRAs, the potential for a turnaround is the primary draw. Datavault AI is currently working on several information data exchange platforms that allow for the secure monetization of everything from genomic data in biotech to NIL, name, image, and likeness rights for athletes. They're even moving into the sports world with partnerships like the Dream Bowl, where they're using blockchain to reward fans and shareholders. This isn't just about online investing in the traditional sense. It's about participating in a shift toward decentralized asset management. Comment below how many shares of DVLT you currently hold, or if you are waiting for it to clear the $1 mark before you consider it a serious play. The business model of Datavault AI is divided into two main segments: acoustic science, and data science. The acoustic side, which many long-term investors remember as WISA, focuses on wireless high-definition sound transmission. This technology is already being used in high-end home theater systems, but the real growth is expected in the data science division. This is where the company leverages Web 3.0 and high-performance computing to provide solutions for data perception and secure monetization. They have a growing patent portfolio that now includes over 70 assets, covering everything from quantum-secured blockchain infrastructure to AI-driven valuation models. While a user on a Robinhood stock trading platform might just see the AI in the name and think it's a trend, the patents suggest there is a legitimate technological foundation being built here. Looking back at their previous reports, the company has shown a 148% year-over-year revenue growth in the third quarter of 2025. While $2.9 million in quarterly revenue is small compared to the giants found in Fidelity ETFs or Fidelity mutual funds, the rate of growth is what caught the attention of institutional buyers. Institutional inflows over the last year have totaled over $5 million, with firms like Vanguard Group and J.P. Morgan Chase maintaining small positions. This institutional presence provides a bit of a floor, but the real driver will be the execution of the Silex deal and the recognition of the multi-million-dollar licensing agreements they've signed with companies like NIAX. If you are managing your wealth through Fidelity Wealth Management, your advisor might tell you to stay away from such a volatile small cap, but the reality is that the potential for a 215% upside to the current fair value estimates is hard to ignore for those with a high risk tolerance. The macroeconomic pressures of late 2025 have not been kind to small-cap tech stocks. Higher interest rates and a risk-off sentiment have led many investors to stick with stable names found in a SoFi investing portfolio or a standard individual brokerage account. This has created a situation where Datavault AI is trading well below its 52-week high of $4.10. For a trader using Robinhood Crypto or Robinhood fractional shares, the low entry price might seem like an opportunity to accumulate, but it's important to remember the risk of dilution. The company has a history of issuing shares to fund its growth, which can sap the value of existing holdings. However, the CFO recently stated that they do not see any pressure to raise cash for several years, thanks to the Silex investment. This is a critical point that challenges the common belief that penny stocks are always on the verge of running out of capital. As we look toward the future, the catalysts for Datavault AI are numerous. The primary one is the successful rollout of their tokenized real-world asset exchanges. If they can successfully tokenize commodities like gold or rare earth metals and generate a recurring licensing stream, the revenue potential could easily meet that $200 million target. Another potential catalyst is the ongoing intellectual property litigation. The company has identified several large banks as potential infringers on their patents and has retained top-tier counsel to pursue settlements. A major legal win or a licensing settlement could provide a massive non-dilutive cash infusion that would immediately re-rate the stock. If you are using a Fidelity mobile app or interactive brokers trading tools to track these developments, you'll want to keep a close eye on any SEC filings related to patent settlements or new licensing deals in the biotech and fintech sectors. The tension between expectation and reality here is palpable. The market expects a company that might struggle to survive the transition from hardware to software and licensing focus. The reality is a company that has secured the backing of a major biotech partner, adopted a flexible approach to capital, including Bitcoin, and is sitting on a patent portfolio that could be worth far more than the current market cap of the company. Whether you are using a Robinhood investments account for quick trades or interactive brokers fees are a concern for your high-frequency strategy, the story of DVLT is one of high-stakes transformation. It is a reminder that in the world of online investment, the most significant gains are often found where the gap between public perception and corporate reality is the widest. In summary, Datavault AI is currently at a crossroads. The drop to 95 cents reflects the skepticism of a market that has been burned by small-cap tech before. However, the underlying growth in revenue, the strategic infusion of capital from Silex, and the massive expansion of their intellectual property portfolio provides a counter-narrative of a company that is just starting to scale. The central insight is that they aren't just selling software, they are building the exchange infrastructure for the future of data and asset ownership. For the investor who prefers the stability of Apple stock or the growth of Nvidia stock, DVLT might seem like a distraction, but for those who use a SoFi trading platform or interactive brokers platform to seek out